Good afternoon, everyone. We will begin in just a moment as I see a few more people trickling in. Welcome to today's webinar, Securing the Future of Your Business. My name is Melanie Krishna, and I am a senior consultant on the Business Advisory Services team here at Pursuit. We know there's a lot of interest today, so for those of you who are new to our programming, Pursuit is a community-focused alternative lender. Our goal is to ensure that our clients not only have access to capital through our loan programs, but they also get the strategic guidance and business expertise they need to thrive. Our focus for today's presentation is to discuss the use of the 504 loan program, which is to help small businesses secure their future by financing capital assets, which helps with planning and growth for the future. We will cover the benefits of this important financing option by reviewing some case studies and addressing any questions you might have to help with both the loan process as well as capital planning. Today, I am joined by Jim Conroy, Executive Vice President and President of Pursuit CDC. In that role, Jim is responsible for driving the growth of the organization's SBA 504 loan program throughout New Jersey, New York, and Pennsylvania. He has been with the organization for quite a while, since 1997, and is a major contributor to the growth of our programs throughout all of our geographies. During his tenure, Jim was responsible for business retention activities, leading numerous redevelopment programs, and assisted in the reconstitution of the Albany County AI Tech Loan Fund. I think that makes him the perfect person to talk about how to use financing as an economic development tool for small business owners. So thanks for being here. Welcome, Jim.
Thanks so much. Happy to be here.
Before we get started, we do have both a chat and a questions option in GoToWebinar. We invite you to drop your questions in there at any time. I will be monitoring it throughout our conversation, and feel free to ask anything you like. So let's just jump right in. We are coming out of a pandemic, hooray. The last 18 months have been challenging for both the economy as a large, but in small businesses in particular. So Jim, I would like to ask you, what are you hearing that is top of mind for business owners right now?
I think it's a lot about stability and what it is that the post-pandemic world is going to look like and how it's going to impact their businesses. Within the last year, with all of the different COVID requirements and guidelines, there was a real change and in a lot of cases, disruption into how normal business was done. In some cases, businesses were able to change their model a little bit and still be very successful despite the problems. In other cases, businesses were shut down and now are needing to be restarted again after the pandemic. And so there's this real kind of curiosity about what the future holds and how it is that a business owner can really be prepared for what's coming next.
And I think that's a really important point. We've talked a lot about stability, and when we talk to clients on a day-to-day, it's like we have no crystal ball, but there are certain things you can do to sort of ensure the capacity of your business moving forward. In particular, we really focus on, how do we secure the long-term operations of an organization or a business? And that really starts with the capital, right? And that capital foundation. I was wondering if you could talk to that.
Yeah, so our company really specializes in helping businesses throughout their life cycle, from the very beginning as kind of a concept through a high growth period to a mature business cycle. No matter what stage your business is in, you have to really kind of think about where it is that you're going and the foundation that you need in order to get there. Much like building a building, you can't build a skyscraper on just a concrete slab. You need a solid foundation in order to really kind of make that happen. And I think in some cases, when you kind of look forward, you can say, well, 20 years from now, I want to, have that skyscraper, but you're going to start out as a couple of story building. And I think just making sure that you have that idea of what's next and preparing yourself today in order to achieve that goal is really what we're talking about here in terms of a solid capital foundation. How much equity do you have? If you need to borrow debt, is it the good and right kind of debt for what it is that you're trying to achieve? Do you have your business model solid? What is it that you can really do to put yourself in a position to succeed at that next step?
And I think that's really interesting because a lot of the folks that we have noticed have talked a lot about capital preservation, so keeping a lot of cash on hand. And you're really talking about here of saying like, yes, the cash is important, especially for some of the folks that were worried about, sustained revenue flow, but we've also seen a lot of folks making significant investment in sort of the long-term and fixed assets of the company, right?
Yeah, exactly. And I think to the extent that you can protect your business by making sure that you have the right location or the right financing, that all plays into that same capital foundation, making sure you have the equipment and the facility in order to support your growth. If you're a business that's growing and you've run out of space, you need to get to a next level business size or facility size in order to accommodate that growth.
And I think also like the change in business model, right? We're talking to a lot of small business owners who, for example, need more inventory in hand because they're doing a lot more digital, e-commerce and that kind of thing. So just sort of what your capital needs are moving forward in terms of the different revenue streams. You have a couple examples of companies that have used this 504 loan program in a couple ways. I was wondering if you could go through a couple of those examples for us to see how that's actually worked.
Sure, happy to. So the first one is a company that's in Bethlehem, Pennsylvania. The 504 program allowed them to refinance a mortgage that they had on their facility, and it was a significant benefit to them on a monthly payment basis because the 504 provides a long-term fixed interest rate and usually a lower interest rate than the market will provide in order to give you better borrowing terms on that same facility. So here was a borrower that actually saved over $1,600 a month by refinancing this mortgage that they had on the property. That's money that can then be redeployed back into the business, like you said, to support other needs that they have, like growing employees or supporting larger receivables or buying additional inventory or expanding to the next town.
And I think the key here is that this company really was happy with the space that they had, so they knew it was useful for the long term, and it can really save from rental costs, and especially if that's what you're going to stay, right?
Exactly, yes.
You have one more example for us, correct?
Yes, this is a very interesting situation. It's a marketing company that was in Lancaster, New York, I'm sorry. And they had been in a facility that they had outgrown. They had looked and found another building that may have been a little larger than what they needed at the time, but they identified that it was a building that they could grow within, and that, looking back, was a really good acquisition for them, not only because it gave them that additional space, as this company has doubled in size since they acquired the property, but also because the space that they had acquired in addition to the buildings was large enough. It allowed this owner to really get into an ancillary business related to farming. So he actually, was growing some apple trees, and then also getting into the cider business.
That's really interesting, right? A lot of us have talked to clients about uses of their space and, what are the additional revenue streams. We just did an article about this earlier this year for my folks that are listening in, which you can find on our website, about multiple revenue streams. And a lot of that was using the space you have creatively in other ways. And I think this was a really good example. Just to answer just a couple questions that were just about that. Just to talk about the two different examples, one was a refinance and one was for actual growth expansion. Can you actually talk about like the 504 loan program and what it's used and how it's different from some of the other SBA programs that are out there?
Sure. So, SBA is an organization that, a year ago, I'd have to describe what it was to a lot of small businesses, but in the last year, it's become a much more well-known entity. It's a federal agency that provides programs to help small businesses start, grow, and expand. And one of their two core programs is this 504 program, and it's ideally suited for businesses that are looking to acquire fixed assets. In a lot of cases, what a fixed asset we're talking about is real estate, and it's got to be owner-occupied real estate. But you're able to finance up to 90% of the total project through the combination of bank financing for 50% of the project cost, which is in a first mortgage. And then we process the 504 second mortgage for 40% of the project costs, and the borrower has as low as 10% equity to contribute. But this can be used not only for the purchase of a building, it could be used for the construction of a building, it could be used for refinancing existing mortgage debt on an owner-occupied real estate transaction. It could be used for equipment, large equipment that has a useful life exceeding 10 years. So things like printing press, or we've done car crushers and barges, and all kinds of different fixed assets. The 504 is really a great program to help a company reduce the amount of equity that they have to put down to get to that next level of growth. So it allows you to borrow more and put less down, so that your equity can again be used to help generate increased staff, increased inventory, perhaps carrying additional receivables, places where your equity, your financial capital is better suited and is going to make you more money in the long term.
Okay, here's a question already, and I had this one too. What exactly is owner occupied?
So an owner occupied commercial real estate transaction is an existing building where there's a business that's going to be located in it that's related to the person who's buying the real estate. And in an owner occupied, what that means is if it's an existing building, it has to be 51% occupied by that company. If it's a to be constructed building, ground up construction, the business has to occupy more than 60% of the space. The reason for this is that the SBA doesn't want this program to be used for passive real estate, where you're just going to charge someone rent. They actually want to know that there's a business that's going to locate in there, and that business is what's going to repay the debt and grow the employees and help the community.
Another question that we're getting is, you talked a lot about purchasing these bigger fixed assets. How big or small are 504 loans?
It's a great question. The 504, the second mortgage, can be as low as $50,000. It can be as high as $5.5 million. It makes a lot of sense to think about 504 with any project that meets the eligibility criteria. But if for some reason we don't think it's a good fit, there are other programs that our company could recommend and/or other referrals we could make. Again, our company's mission is to try and provide creative financing to help small businesses. And if that means we have to make a referral to someone outside of our organization, if it's in the best interest of the company, we certainly will do so.
Great. So can you talk a little bit about what's the difference between 504 and just going to your bank and asking for like a traditional mortgage?
Sure. So I think one of the big misconceptions that's out there is you go to a bank to get a commercial mortgage for a property, and the bank is usually going to require you to put at least 20% or 25% down. With a 504, you only need to put as low as 10% down. So that's one of the big selling points and the differences between the 504 and a conventional mortgage. Quite frankly, if you don't have 20% to put down, you may not get a bank to return your phone call in some cases. So it's important for the business community to understand that this program exists, because if you're talking to a banker and you only have 10% to put down, ask them, what about a 504? We try our best to market this program to bankers, credit unions, and the business population as a whole ourselves. But it's sometimes a borrower being knowledgeable about these programs actually helps tremendously in reminding the banker that this might be a better option for them. Some other benefits to the 504 program is when you go to a commercial mortgage, usually the banks are looking to only fix their rate for 5 years. And that's because they're concerned that if they give you a really good rate and the rate environment goes up, that they don't have an opportunity to make more money as the interest rate environment goes up. So for intentionally, they set the 5-year rate reset. So you'll have a 10-year term, usually with a 20-year amortization. So you're making payments as though it's a 20-year loan, but there'll be a balloon payment in 10. And your interest rate will be fixed for 5, but then you have to reset it for the next 5. And in that process, you can experience some interest rate volatility. The 504 is simple. It's a 25-year fixed rate, and there's no adjustments in the entire life of the loan once it's closed and funded.
And you've seen that a lot of bankers even approach us and say that this might be better for their clients. So it's the 504 is not detrimental to your banking relationship. It can actually enhance it.
Exactly. The bank enjoys a first mortgage where the 504 is in a second mortgage. So from a collateral standpoint, the bank is in a much stronger position. And this is really what SBA had intended, is that a borrower that's growing that may not have the cash to make that fixed asset purchase to get to the next level of growth, they want to encourage not only the borrower to take that leap, but they acknowledge that in a lot of cases, the banks are not able to take that level of risk. So the 504 is a second mortgage that allows the bank to do that project in a more reasonable way. Another important variable to kind of reemphasize here is that the 504, not only is it a 25-year term and fixed interest rate, the rates are generally at or below market. And currently the interest rate is as low as it has been in the 23 years that I've been doing this. It's under 3% fixed. So, you know, a bank first mortgage could be anywhere between 4.5% and 6%, depending on your credit score and your qualifications. The 504, regardless of those, is going to be the same rate, the same term for every single borrower. So it's a very low rate, and the payment terms make it extremely affordable.
And so that's just one of the benefits of doing it right now. I know that there's a couple other things that are happening as a result of COVID right now in the 504 program too. I know some of the other SBA programs have had payment coverage, and it also sounds like some new loans might be covered under this program as well.
Correct. So the stimulus legislation that was passed in December of 2020 provides a lot of benefits to small business owners that are applying for any kind of SBA loan program. So we've heard about PPP and EIDL and those other ones. Those are kind of temporary programs just because of the pandemic. The core programs that the SBA has offered and has for their entire career, or 1954 is when they were started. They have the 7A program and the 504 program. We've been spending a lot of time talking about the 504, but the 7A program is out there as well. But in all of their programs, they have the either reduction or complete elimination of fees for any loan that's approved by the SBA between now and the end of September. In addition, if you are approved between now and the end of September, you actually will receive 3 months of payments that the SBA will make on your behalf after your loan closes, which you know, it could go up to $9,000 per month. That's a significant benefit as well. So as you might expect with these benefits, it's a very busy time to try and get an SBA loan right now. So if it is something that you're interested in pursuing, or especially this 504 program, start making application today in order to have a chance to make it.
Jim, can you talk about what is the basic eligibility to apply for a 504 program? Like, what are the criteria of like the business itself? You know, any credit criteria that you can share with us right now for people who are planning on either applying soon or in the future?
Sure. I mean, the eligibility is the major eligibility issue. If it's a real estate project, it has to be owner occupied. That's first and foremost the biggest hurdle we usually overcome. The second is it has to be a for-profit business. It cannot be a not-for-profit. And then, you know, third is the underwriting criteria is very similar with the 504 as it is for all the other SBA programs. The SBA exists to try and find, you know, very much our mission, trying to find ways of saying yes. So maybe it's a business that's fallen on hard times, and they have a really good business plan and projections in a way that they can repay the loan in the projected periods where they can't in the historical. You know, whatever the circumstances are, so long as we can explain to the SBA what happened with the blemishes or the problems that a borrower has had, we can still get them approved. It's just, you know, how many, if you have bad credit and, you know, bad cash flow and a criminal background record, you know, it's going to be hard for SBA to approve that loan. It's not impossible, but it makes it harder. If you have a lot of affiliate companies, sometimes that can also be a bit of a challenge. So if you only have a few entities and there's not a whole lot of additional underwriting that goes into it, that can make a huge difference as well. But it really boils down to how prepared is the borrower for this loan? You know, is there a business plan? Is there a complete application? Is it a well thought through business idea? You know, is that, you know, that capital planning really kind of been done by the borrower, and the lender and the SBA can believe in that story and approve the loan.
So this actually is a common question. We've gotten it twice already today. Are new ventures or sort of startup companies eligible for 504s?
Absolutely, absolutely. In fact, one of our companies, one of the best examples we have is Chobani Yogurt, and that was a gentleman from Turkey who came over to the United States and bought an old production facility and has turned that into a $1 billion industry, which has revolutionized the entire yogurt industry. And that was just you know, a man with a dream and a startup business. So it can happen to anyone.
And some folks are asking, what are the resources to help? I think the biggest thing that you talked about, Jim, is that you really need transparency in that loan application. So if you do have credit concerns, for my folks that are on the webinars, we have on-demand webinars. We did one last month with our partner, Trust Plus, that actually shows that you can work on your personal finances and things like that through resources that Pursuit provides. You can take a look at our website, pursuitlending.com. And if you are interested, there's information there that connects you with that service at no cost. So if you're working on credit, it's really important to be transparent. For folks that are working on business planning, lots of connections with the SBDCs throughout the country and throughout our territories, and they're a great resource. So, you know, Jim, what we talked about is that oftentimes we see business plans with incomplete financial projections. That's like a big sort of, hey, we don't, you know, you might have a really good idea, but what are the numbers behind it? And this is a really good way to actually get the help that you need to make that happen. Are there other common things that you see in the 504 loan application that people should be prepared for?
Well, I think for any business owner that's looking to get financing, what I try to suggest is that the borrower puts themselves in the shoes of the lender, and it's still a very intuitive type of program. You know, how is it that you're going to repay the loan? You know, who are you? Tell me a little bit about the business. You know, the who, what, why, when, where, and how. And you can anticipate those questions. And whether you're a new business or an existing business, you know, the analysis that's going to be done is going to uncover everything. So whatever issues you've had, bring them right to the front, explain them, why it is that they happen. You'd be surprised how many times we can work through those issues. And if they're brought to the forefront and addressed in a constructive way, and you've mitigated the reasons why that might be a concern to a lender, you know, we can still make that loan. But I think you know, it's a lot about preparation. Make sure that your business plan is complete, and prepare the business plan as if, you know, you can kind of put yourself in the shoes of the lender and what it is that they're going to want to know and hear. And then, you know, if someone is calling you from the lending institution for questions, get back to them immediately. If there's a checklist of information that's needed, provide that as quickly as you possibly can. If there's a phone call that you missed, return the phone call right away. And I think you know, if you demonstrate a willingness to do what's needed for the application, and you're open and transparent, then the lender really will go to bat for you. And at the end of the day, that's really what it's all about.
So we have a couple other questions about the proceeds of the loan. One of the questions that we're getting is, can you use the 504 loan program to pay off a primary mortgage? So this is that refinance situation. What does that kind of look like?
Yes, you can. It's the refinance requirements that the SBA has currently are somewhat narrow. So instead of talking about those, what I will say is that we are anticipating any day now to get expanded eligibility guidelines from the SBA that will make it a lot easier for us to make loans eligible. So, you know, for example, the current requirements say that a loan has to have been in place for 2 years before it could be eligible for a 504 refinance. These new rules that are coming out will make that time 6 months instead of 2 years. So there's some really big changes that are coming very quickly that will hopefully make a lot more projects eligible. I think the best thing to do is give us a call, let us know the circumstances. Again, we'll be the first to tell you if it's something we think we can do. If it's something we can't do, we'll be very quick and professional with your request.
So there's another couple other questions about that. Is it also eligible for leased property?
Well, no, not really, not leased property. But if you wanted to buy equipment, say for a manufacturing facility that's in the leased property, you can still do a 504 for the equipment that's going to be in the leased facility. In some cases, we finance a building that's on leased land. That is eligible. You would buy the real estate and have a land lease that exceeds the term of the 504 loan. I don't know if that's where that question was going, but there are ways in which we can still make it eligible. But generally, if it's just a straight lease facility, a retail facility, for example, the SBA 7A program, which our company offers, is a better financing instrument for that request than the 504.
And we've talked about this too. Many of our 504 clients have come from other loan programs in the SBA portfolio or have loans that are built together. So that's one of the advantages of talking to us, is that we can kind of see if the 504 is not a fit, or if it needs a sort of sister program, we can join those together.
Exactly, and not only that, but we're keyed in with a lot of local, regional, and state economic development agencies, and know all of those different programs as well. And in putting together a financing package, we might be able to layer some of those other programs in order to provide the borrower the best options possible.
There's a couple questions about the loan process itself. You know, it says, obviously we'd want you to talk to a loan officer first, but people are asking about, like, what is the length of the process, sort of documentation, things that they can get ready to even start the process itself.
Yeah, that's a great question. So the way it works is that, you know, our company is what's called a Certified Development Company, or a CDC. There's only 200 of us in the United States that are authorized to offer the 504 program. We have to complete our due diligence and underwriting, and then the package is sent to the SBA for a second approval. So that entire process, from the time that we get a completed application to the time it gets to the SBA, can vary. But generally speaking, the lessons learned is just as quickly as you can get it to us, the better. The faster you respond to questions, the better. The faster you can get us information that's on our application form, the better off you'll be. So, you know, in the current environment, because of this September 30 deadline for all of these benefits, it's incredibly busy right now. So literally, if this is something that you're interested in, you know, getting started right away would definitely be advisable. The SBA process alone right now is in excess of 20 working days to get something back from them. So we're quickly reaching a point at which it's going to be hard to guarantee people an approval before September 30.
And sort of some of the basic things that as you mentioned, just to like reiterate for this question, is, you know, we'll need tax returns, your credit report, a business plan, and all of those things. So it's better to have that before you even start the application, just because that's going to be a requirement to be asked for you anyway. So make sure that that's there.
Yes, and our website does have an application checklist as well as a copy of our application form. So that gives you a good comprehensive checklist of things that we need.
So this is an interesting COVID-related question. Are there any considerations for folks who have maybe had a bad year because of COVID, who have been impacted by the pandemic, that they should be aware of or put in their loan application, or is there any pitfalls that you see?
Yeah, this is a really challenging time to be a lender. You know, we have never seen disruption like we have seen over the last year. I think to the extent that you can show that your business did well in 2018 and 2019, And in 2020 was obviously a stub toe. That's going to make it a lot easier for us to say, okay, well, the projections are return to normal operations that we saw in 2018 and 2019. But as I kind of led off, I mean, the future is not necessarily the same as what it was before. So it is a challenging time to be thinking about underwriting a new loan request for businesses that were hurt in the pandemic. What I can tell you is that it varies probably to a huge degree. How many people have weathered the storm and others that have really suffered. I can promise you that we'll do everything we can to explain it, to investigate as best we can, and to advocate if possible to get an approval.
And I think the volume that you mentioned of just the record number of applications just reflect that the SBA is still actively interested in making this program work. So the question just becomes, is that, do I start with my traditional bank or talk to you guys first?
Yeah, I would say historically, about 90% of our referrals have come from the banks. So, 2 years ago, I would have told you to go right to the bank. But our business has changed as a result of COVID as well. And I think, it's certainly possible for you to come directly to us. In most cases, we're going to dial your banker into the conversation anyway. So you can come directly to us or ask your banker if a 504 is a good option for you. And if they're not familiar with the 504 program, they can certainly get in touch with us, or you can teach them something.
So that actually asks another question. And when talking to their banker, should they be talking about the 504 loan program? And are both loans fixed if they are in the 504 program?
Great question. So the bank first mortgage can be kind of the normal customary deal that the bank has if they did a conventional deal. So a 10-year term, 20-year amortization, 5-year rate reset. But that's only on the first mortgage. So you have the 25-year fixed rate on the 504 in a subordinate position. So the blended benefit is really what you get. However, because the bank does have to have a 10-year term on the first mortgage, no less than a 10-year term, which is kind of normal and customary anyway. But the bank has a really good collateral position with that loan. So the interest rate that they charge may not need to be as high if it was an 80% loan to value or a higher loan to value financing request. So yes, the 504 should not only provide you the opportunity to negotiate better rates and terms on the first mortgage, but also, it's really important for you to have a banking relationship. And this 504 first mortgage may allow you to get a line of credit from that bank, or a term loan for some equipment if you didn't want to include it into the 504, or whatever the circumstances may be. Forming and building that relationship with the bank pays dividends long term for your business, and the 504 is a great way for you to establish that relationship and get it off on the right foot.
Great. Well, I know we're coming up on 35 minutes and that time has flown really quickly. Thank you everyone for your questions. If you continue to have questions about that, we really encourage you to reach out to us. We have a lot of resources on the 504 program, both on our website and we have a whole team of folks who can answer any questions about the application process and also help you and that whole navigating that relationship with your bank as well. I know that there's a lot more questions about specifically working with your bank, and I think those are very specific to the client and the relationship you have, but we have definitely facilitated a lot of those conversations. And they can help you sort of say like, hey, how do you work with the bank, how the 504 works with your traditional mortgage. I know we could get to every single question on that, but it seems like we have a lot on that theme. But that does seem like it's more of like a, let's talk about your situation and what that actually looks like. I'm just gonna kind of leave it up and say, like, Jim, what are the key takeaways you want this audience? We've had some really illuminating questions and some really good audience participation. So what sort of some of the core things that you want to take for people to take away from about the 504 program?
I think in terms of your business, whatever it is, trying to figure out what you can do to improve your financial performance, obviously, which is on the sales side, but also in a management standpoint, what it is that you can do to improve, your existing borrowing, to reduce your costs, to put borrowing in place in order to get you to the next level, and to establish those relationships in order to really help you. And I think no matter what kind of financing you're talking about, universally, the longer the term, the lower the interest rate, and based on today's rates, the fixed rate, as long as you can get it, are universally positive. So the longer term, the lower the interest rate, and the less money you have to put down, that it's fixed, are all variables that are very important to focus in on. The 504 happens to do all of those. It requires only 10% down. It has a 25-year term. It's a fixed interest rate for the entire term, and the interest rates currently are below 3% fixed for 25, which is just unheard of in the commercial real estate arena. So for that reason, for those benefits, business is booming. We're doing very well, but I think small business owners as well as bankers should be aware of the program benefits more now than ever. And if they don't, then definitely remind everyone that you know of that it's a great program to consider.
Well, thank you so much for your time today, Jim. This was one of the most requested topics from our audience, and I know that it will generate a lot further questions and comments. So we invite you to continue to stay in touch with us at info@pursuitlending.com. We have a whole team of folks who can continue to help and support you. If you have questions about some of the resources we talked about on today's webinar, that is also on our website, including connections to Trust Plus, which helps with credit and credit-related issues, and links to our partner organizations such as the SBDCs for business planning. And if you have any questions or concerns, please reach out to us at any time. But thank you so much for your time, Jim, and we look forward to hearing from all of you guys with loan applications or questions moving forward. Have a good afternoon.
Thank you.